Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for October 21st, 2019. Today we're looking at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. Two significant trends here on the daily time frame. The red trend line, of course, a previous downtrend going from all the way back top of the chart into the 1.0235 or so level back in April of 2019, all the way down to the bottom of the chart. We're looking at August 13 of this year, and that was all the way down into the 96.50s. So since then, since we matched that low down in August, we've been seeing an uptrend. The blue trend line, market's been pressuring higher from August through, let's say the highest high that we've seen back in October 3rd, back here into the 1.0025 or so level for the dollar franc. Since then, we've seen a little bit of a pullback down and a shift in direction as the market fell since early part of October, now challenging into new lows into the 98.40s once again as a new low. Broke the blue trend line and pressured back down last week. A couple of things to note now that we're pressuring back down. Let's go ahead and zoom it in. First off, we have now pushed back through, kind of in one fell swoop in a couple of days, pushed back through both the 200 period moving average and the 100 period moving average. Green line 100, blue line 200 period moving average, and just within a couple of days, we pressured right back on the other side of the moving averages, which could lead us to some more bearish expectation with that full press break back underneath those moving averages. Something else to note here about the orange shaded area, 98.55.65, is that's been historical support and resistance before. The reason why we are looking at this orange zone as a significant area is this right here, support here, not too far before that blue circle. You see support as well, and so historically we know that it's support. We also know that often when support is there, we would expect underneath it we'll find resistance. So today we're looking at that orange zone 98.55.65 as resistance from former support and underneath the moving average, the 100 period moving average that we just pointed out a moment ago. So a shift in direction, pressuring through some significant points of interest, moving averages, trend line last week, support from past, tells us that at least for now we'll follow through with the bearish momentum and look for selling on rallies into resistance as the USD continues to make some headway lower as well. Will give us some confidence in that. Let's take it down to the 4-hour time frame, and here we are sitting underneath that orange zone. You can see the past several 4-hour periods sitting underneath the 98.55.65 level. So as long as it stays underneath there today, I think we're looking for it to hold resistance. We don't have any significant scheduled news events on the calendar for today, Monday, October 21st. So I don't think there's going to be a lot to give us some upside momentum, but it could always happen. But for the time being, as long as it's underneath 98.55.65, I'm looking for it to stay underneath there. Follow and target back down to the green zone, which really isn't too terribly far away, 98.40.30. And of course, beyond there, we would look for further movement lower to the pink zone. All of that will change and shift back to the upside if it gets right back above 98.65. So that's the risk in the scenario. We place our stop loss above at an appropriate level for your risk management strategies. You target lower levels. Back to the daily time frame one more time. I want to take a look at Fibonacci. Let's say Fibonacci from the bottom of the chart, down here where the blue and the red trend line intersect, to our current resistance high, the highest high on the chart here, and putting Fibonacci from the low to high, interesting enough, puts our 50% retracement level of that trend range at 98.43, top of the green zone, 618, further down here into the 98 level, 0.98, which is just shy and just underneath the pink shaded area. So a couple of things there with Fibonacci. We're settled down on top of the green zone, but a break there easily sees it back down to the 0.98 level. So if we can get into a short at 98.55, we have the potential of seeing it down to the 618 as a 50% or a 50 pip profit. running back down to the bottom of the pink zone and the 618 fib, and of course further profit seen as it pressures through there. The risk here is that it pressures back above 98.55.65 orange zone. 382 of that same range sits up here at the purple shaded area near the 98.85 or so level of the previous rising trend range. Back to the 4-hour time frame again. So what I'm looking for today is for it to stay under the orange zone, target back down to the green zone, or lower back to the pink zone and the 618 fib. Risk is a break above the orange zone today for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.